Bank of Canada has left its key overnight rate unchanged. I'm going to tell you all about it starting right now. Hey, it's Andrew Shackleton, Kitchener-Waterloo real estate broker, drew@home.com. So yes, you heard that right. Bank of Canada at the meeting today left the overnight rate unchanged at 5%. That's actually unchanged since July. So we've basically had 6 months straight of it being at 5%. There was some talk in the industry and in the media about them possibly having a rate cut. I thought that was a possibility, although it was equally likely that what we saw with them sticking firm at 5% was what was going to happen. I certainly didn't believe they were going to raise them, that's for sure. Anyways, the Bank of Canada's rationale was simply that inflation is still too high. We're sitting around 3% right now. Their target is 2%, and obviously, they want to bring that down, and they've left that overnight rate at 5% for that very reason. Now, where's this talk coming from about them lowering rates? Well, it's coming from south of the border. People down there were saying they're looking at 2, 3, and 4 rate decreases over the next 12 or 24 months, and that's really spilled into the Canadian scene, and people were thinking that was going to happen here. I do believe if the Americans do that, we will follow suit, but I think we'll be lagging them time-wise as far as when we're going to put those cuts in. Maybe the summer would be my guess, but things do change as the banks get new information. One thing I can tell you right now, mortgage rates in Canada are of course set by whatever the Bank of Canada does with that overnight rate, but they're also affected by what money is paying on long-term debt in the US. And if you look at the average mortgage rate in Canada from November to the average mortgage rates that are available right now on, say, a 3 or 4 year or 5 year fixed mortgage, they're actually down about 0.5%. And the average across the country, for example, on a 5 year fixed is 5.5%. If you're shopping around for the lowest rate you can get on a 5 year fixed right now, it's actually about 5% even, which is a heck of a lot better than the 6% you were paying in the fall. So that's good news for buyers or for people doing a refinance, no question about it. Now, what's this 5% overnight rate mean for the spring market that's coming up? We're really only a month and change away from it being that spring market. The next Bank of Canada meeting is actually March 6th. And by then, we're going to be into the spring market. I think what's going to happen is, as usual, the spring market is always busy. Lots of buyers come out. It causes a spike in prices, which usually peters out in the summertime when it's hot. So from where we are right now, where we've basically just barely into neutral market territory as far as inventory, I think we're going to go back down into a seller's market like we typically do in the spring. I don't think we're going to see a repeat of 2021 and 2022 where prices went crazy, but I do think prices are going to come up a bit as they usually do, and it's going to be a typically busy spring market, although not crazy. Anyways, that's all I got for you today. Thanks so much for watching and have yourself a fantastic day.